How's it, guys? Welcome back to FX Rhapsody. Today we're going to be doing some midweek analysis. It's going to be on the EURUSD. This is the currency pair I did analysis on past weekend. And let's just see what's been happening this week and where some trades or possible trades could have been taken. Before we hit the charts, just go visit my website. It's on the bottom left corner over here where you can find some previous trading material, some nice reading material trading. Some for those of you that's getting started into trading, go visit the website. There's some video categories that you can watch that will get you started, some nice strategies that you can follow. Also, my preferred brokers is on there, guys. These guys are absolutely brilliant. Go have a look at them, go try them out. You definitely need a reliable broker behind your side. Okay, so let us hit the charts. So what happened was, well, let's see what happened this week so far. We're looking at the EURUSD 1 hour time frame. I'm going to be looking at I'm going to be showing you some possible trades that could have been taken, but it's going to be on the 15 minutes. But on the 1 hour time frame, what I wanted to show you is we had some price going down and making some or doing some ranging in the market, some consolidation. So what I was saying is I wanted to see if price is going to break to the downside or just carry on up, or making some retracement going up to the upside. And what I want to show you is this section over here. This is a fair value gap. For those of you that hasn't seen my videos about fair value gaps, please go have a look at them. I'm also going to be making more videos regarding the fair value gap and how to trade them. But this area in the market, as you can see, created a fair value gap on the 1 hour time frame. And that's a nice area to highlight always, because we're expecting price to return to that area in the market. Okay, so I'm always highlighting these areas for if I am in a trade, entering a trade, this will be my target areas, or this will be areas that I am taking trades, possible trades. So always highlight them and see what price does in those areas. But let us go over to the 15 minutes and I want to show you something there. Okay, right, guys, 15-minute time frame. Let's see what happened in the market this week. It was this week so far, price went down and just hovering inside that area that I've been highlighted. And then we see a nice little breakout of that area. So now is the time that we stop sitting in our hands and gearing up for some trades that's being taken. We wait for our swing high and swing low, okay? But there's not always going to be a nice trade, okay? I'm just going to show you why. There, okay? We have a swing high and a swing low. For those of you that's been watching my videos this last couple of weeks, we have a swing high, we have a swing low, price retracing not to the 62% area. As you can see, price just going short of that and coming back to retrace and again short of that. I'm pedantic. I don't want to take those trades, okay? Because there's a lot of times that price, goes beyond that point, and I want to stick to my area where the price goes to the 62, between 62 and 79% area. So now I'll wait again. I'm waiting for price to do another retracement. So now we have another swing low and then another swing high. Okay, so this is now the areas that I'm going to be concentrating on. So let's have a look. So if I take my Fibonacci up from this swing low to that swing high, I want to see retracement to that area happening, and nothing yet. Okay, so price is still hovering in between. So now what we have here is we have another swing low and another swing high, and this is the area that I'm looking at. We have a swing low and we have a swing high, price retracing back to the 62% area, and that is where I take my trade. As you can see, possible trade entry going up. Where's my take profit? Where's my target area? My target area is this area that I've been highlighting, or that I highlighted on the 1 hour time frame. That's the fair value gap area in the market. All right, guys, you could have possibly taken a lower entry, but like I just showed you, it's not always that there is going to be a possible trade or a trade that's going to happen. You will lose out on some trades, but that's fine because there's always possibilities in the market. So now price starts shooting up. So your target area, your first target is obviously beyond this 0%, and it's also the fair value gap area. So now if you've taken that trade, you would have now sat with at least 16 pips, 17 pips. Your second target area is always going to be your next level in your Fibonacci, your negative 100. So we wait and see, is price going to get there? Is price not going to get there? So now what we see is, we see some type of a support forming in the market. Look here, I'm just going to highlight it out for you. There's the area in the market. I'm in the trade. I will exit this trade if price breaks below this area. Okay, then I know price went to the fair value gap. It reached that area, and if it breaks below it, then I will exit my trade, because then I know price is going to start coming down again. Okay, so I'm still holding on my trade. I'm still holding, price rejecting that area, and then there we go. Price starts shooting up. There's another target area in the market that I'm waiting for, and that's going to be my next target. So I'm still holding into the trade, and once price reaches this area, breaks beyond that area, then I exit, because now I know I've hit two targets, my 0% and my negative 100%. If you did take that trade, just minimizing it a little bit, and you exited over there, that would have been a 40, let's call it a 40 pip, 40 pips that you could have taken. That's enough. Take those pips and wait for another opportunity in the market to arise. Now we know that price went up. Now let's wait for a possible retracement back. We see that price went past the fair value gap. Now it filled that gap. Now there is a big possibility that price is going to start retracing back downwards. So now we're sitting in our hands and we're waiting for some type of a bearish movement or a sell opportunity. There's a low in the market that we're looking at. We're waiting to see price breaks that low or breaks that low in the market. So now we've got a swing high over here, and we're waiting for a swing low to appear. You see price breaking, it's consolidating a little bit, then it starts moving up. It's making a retracement move. Now, this is our opportunity to look for any sell possibilities in the market. So I'm just going to take this out, not to confuse anything. We are waiting for price to retrace back to the 62%. We already bagged 40 pips in the market on this one currency pair. So will price retrace back? And let's have a look. I'm just going to, excuse me, I just want to do that. There's our retracement back. And over here, zooming in, that's our entry over there. Make sure your Fibonacci is always on perfect levels. Oops, just want to do that. There you go. So you see price retracing back to the 62% area. Because we had a break in structure, we had a swing high, swing low, price retracing back to the 62% level. Now, what we do is, we're inside the trade. Our first target is obviously going to be this 0%. That's our first target. Price going beyond that area in the market. When price moved down, it created a candle like this. We must always be aware of these bearish and bullish little candles inside the movement down. So this is a bullish candle inside the bearish candles. That creates, just going to take this out, don't want to confuse anybody. We're already in this trade, okay? If you stuck around just for the first target, that's another 20 odd pips. So now you're bagging 60 pips already. You could climb out the trade. If you're scared prices that's going to start reversing, But now let's see if we can't wait or get another entry or wait for confirmation. So we have this area in the market. We have got this candle, price breaking the low. I'm taking this swing low in the market and I'm waiting. This is going to be my swing low right over there, my swing high. I'm waiting for price to make a turn to move my Fibonacci to my swing low. So that and there. Okay, so there is my swing high. That's going to be my swing low right over there, because price retraces back and look at that. It hits another 62% area, 62 to 79% area. And then it goes bam in that area and it starts shooting down again. So that's a second confirmation that your first sell position is still valid. Your first sell position, I'm just gonna, sorry, I took it out. I just wanted to show you where my 100% or negative 100%, my second target is going to be. If it will let me, there we go. So that's going to be, that's your first entry over there, and that's going to be your target area that you're looking for on your first sell opportunity. Okay. If you missed, obviously, if you missed your first sell opportunity, let's just make this another color. Let's make it green. Let's make another one because there's another negative 100. So there's two exit areas in the market now that we're looking at. So price follows and hits both of those areas. And that is then for me sign, okay, now I'm going to climb out. You can stay in your trade. Just trail that stop loss down. But if you did take that first one and you waited until price broke past that, it would have been another 60 pip in the bags. So now you're sitting within a couple of days on one currency pair that's over 100 pips, or let's call it 100 pips in the bag. And that's all we want. We want to just chase those pips. Get those entries perfect. And like I said to you, if you get this right, and if you start just grabbing those pips and bagging those pips, the money eventually will come. But please practice this first. Get your trading right. Go in with the smallest lot size, the smallest contract, just to make sure that you're getting these entries right and that you're bagging the pips. It's all about the pips currently. Just to make sure that you're grabbing it and you're getting comfortable on this way of trading. So guys, that's all from our side on this little midweek analysis. Let's see where price is going to be heading. Currently, excuse me, currently what we're sitting with is price just consolidating at this area. As we can see, price is just hovering up and down. We want to see, some movement towards the end of this week. If not, that's going to be it for this currency pair. But always be sure to keep an eye out, because we have got a little bit of a consolidation happening. I'm just going to do that. That's a quick little one just to show you what I'm looking at. So we have that, we have that. As you can see, price is ranging in that area, and we want to see when price is going to be breaking that. And if it does, we do exactly what I just showed you. We use the retracements, use the swing highs, swing lows, and this is just only on one type of trading. Let's call it the Fibonacci. There's also the fair value gaps and all that you can consider, but I will make some more videos on that on a later stage. So guys, hope you've been having a wonderful week. If you like this video, don't forget to hit the like button, subscribe button, notification bell. Show me some love by hitting that super thanks, and I will definitely be seeing you in some more videos. If not this week, definitely this weekend for some analysis videos. So guys, I hope you've been having a wonderful week. Stay safe and happy trading, guys.